Cromwell European REIT, (REIT), stands as a prominent player in the European real estate investment trust sector with a diversified portfolio spanning office, light industrial, and logistics assets across key European markets. One of REIT's core strengths lies in its extensive geographic diversification, which helps mitigate risks tied to any single country or sector. The REIT benefits from the deep asset management expertise of Cromwell Property Group, allowing it to identify value-add opportunities and optimize returns through active management. Its stable occupancy rates and long-weighted average lease expiry also provide a solid foundation for recurring income, appealing to investors seeking steady yields. However, REIT faces certain weaknesses that could temper its growth trajectory. The European office market has been undergoing structural changes, particularly with the rise of hybrid work models, which may affect demand and rental rates in some locations. Additionally, as a REIT listed on the Singapore Exchange but holding assets primarily in Europe, REIT is exposed to foreign exchange volatility, which can impact reported earnings and distributions to unit holders. Its leverage, while within regulatory limits, also requires careful management in an environment of rising interest rates. Looking ahead, REIT is well positioned to capitalize on several opportunities. The ongoing shift towards e-commerce continues to drive demand for logistics and light industrial properties, segments where REIT has been actively expanding. There is also potential for further portfolio enhancement through selective acquisitions in resilient markets and asset repositioning to meet evolving tenant needs, such as sustainability upgrades and flexible workspace solutions. As environmental, social, and governance (ESG) considerations become increasingly important, REIT's commitment to sustainability could further differentiate it in the eyes of tenants and investors alike. Nonetheless, the REIT must remain vigilant against external threats. Economic uncertainty in Europe, driven by geopolitical tensions or inflationary pressures, could dampen tenant demand and affect property valuations. Regulatory changes in both Europe and Singapore may also introduce compliance challenges or impact tax efficiency. Furthermore, increasing competition from other real estate players, particularly in the logistics space, could compress yields and make attractive acquisitions more difficult. Navigating these headwinds will require REIT to leverage its operational expertise, maintain financial discipline, and stay agile in response to shifting market dynamics.